Welcome to today's session and thanks for joining. In these live sessions, I demonstrate a technique for swing trading profitably in any market condition by taking only high probability and low risk 360 degrees trades. In the last market recap, I explained the value of taking reversal trades because they tend to be more lucrative. I said that I was not willing to continue to buy and I did share only one shorting idea. The shorting idea was indeed a reversal trade and in specific it was a bounce trade. The extreme reversal trade setup in Q. We look at how those things played out. Greetings, I'm Sagar Nandi, active trader in multiple markets using Q systems that runs on Metastock and registration platforms. Q has multiple components. Disclaimer, this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk and you and only you are solely responsible for the outcome of your trades. Options trading can be risky. You may refer to the characteristics and risks of standardized options document from OCC to decide if options trading is suitable for you. Let's start with charts of instruments that often move the market. We'll first look at dollar index ETF UUP, which tends to be inversely correlated with the market, though that inverse correlation, as you know, does not always work. I'm going to use the at a glance template along with the momentum chart. So weekly chart on the left and two daily charts in the middle and the right. As expected, after hitting the upper boundary and then displaying a bearish indecision and bearish headwind, the unique reversal signal in Q systems, UUP pulled back. Earlier there was a trendline support. That support is broken now. In the last market recap I mentioned that it would be difficult for UUP to break that trendline support, which is broken now, and the white and yellow direction lines at the same time. It stopped right at the two direction lines, white and yellow, went up little bit. And notice now if it can go above the few other direction lines, magenta, cyan and this gray, then UUP would close above all the direction lines while creating a fan out pattern. If it was a stock, that would be a nice time to buy the stock, isn't it? So we will see if that happens, if it can regain the few declining faster direction lines. If it happens, it will create a fan out, and notice in the momentum chart it is currently above the 50-day moving average and 200-day moving average, but the 200-day moving average is still declining. It is a slower moving average, of course. If it can go up from here, then it will create a kind of pullback setup. Instrument in an uptrend pulling back to 50-day moving average and going up from there. So both the entry chart and the momentum chart will give a buy setup if it can go up little bit. Can it go up a little bit? That will probably depend on how the central bank rate decision is, or how the reaction to the central bank's rate decision is next week on Wednesday. For the time being, looking at the multiple supports, it is not possible to short EUP, and if it just starts to go up little bit, it will be possible to buy. Let's look at the other instrument that is directly correlated with the market, and that direct correlation always works. Megacap custom index. We are seeing a lot of up down movement in the market, not only from week to week but also from day to day. Here in the backdrop weekly chart, in this period we saw Megacap custom index underperforming the market. The relative performance line sharply tilted down. That happened after creating a false upside breakout at the watermark resistance that was created by the bearish headwind signal. After 4 weeks of underperforming, in last 2 weeks it sharply outperformed. Now this up down move is happening over multiple weeks, 6 weeks in this case, but if you watch the market from one day to another day, you will see such movements are happening from day to day also, churning. Is there a buy or short setup? We can decide that by looking at the daily chart. There is none. It is bullish because backdrop color in weekly and traffic color in daily momentum colors both are bullish. However, it is far above the recent swing low. That does not give us a low risk buy point. Even if it tilts down, it will not give an easy shorting opportunity, not in the Megacap custom index. So it is bullish but does not allow us to buy, does not allow us to, of course, short. That Megacap custom index rallied for last 2 weeks had an influence on the market. We'll look at that shortly when we look at the market ETFs. Before that, let's look at market breadth internal health check. Usually the market follows the internal health, not the other way around. Total view, the broadest view of the USA market breadth chart. Let's look at the percentage of stocks above 50-day moving average. It recovered quite a lot, stopped right near the 50% level. So this was a recovery in a downtrend, and it is currently stalling just below the 50% level, slightly, very slightly declined on Friday. If it comes down now, then the downtrend would resume looking at this particular breadth indicator, and that may give us lucrative shorting opportunities. In a downtrend, the best shorting opportunities come after the market recovers a bit and starts to go down again. So if it comes down, we'll probably get many lucrative shorting opportunities. We had a series of confirmed Hindenburgs earlier, price pulled back, and I showed in the last market recap, growth stocks started to underperform right from the time the Hindenburg cluster started to appear. Then price recovered. At the right edge, we have an indecisive shape candle. We'll look at the candle using weekly daily shortly. Before that, let's look at what is in favor. Growth is still underperforming. Value is doing better and small cap is doing better. That is an interesting time when small cap value is doing better. Which were those stocks that are doing better now? Small cap value. How were they doing earlier? They were languishing. That is also a kind of rotation going on across several weeks. And again, if you looked at the market day to day, you would notice that that kind of churning is happening not across weeks but across days as well. I'll not look at the other breadth charts of Nasdaq, NYSE or the major indexes. They give no additional signal, but let's look at the total view using weekly daily. Weekly rallied for 2 weeks, came back to the level where the bearish headwind appeared earlier, which is not uncommon. After bearish headwind leads to a price drop, often price tries to regain that level, and if it starts to go down now, that will mean that some selling pressure is still left, and that may give lucrative shorting opportunities. The weekly is of course bullish, and daily, though the traffic light color is bullish, we have indecisive shape candle, and we have, even more importantly, indecision cluster 4 out of last 5 days. Those are not shorting signals, but they often precede a decline if we have a cluster of indecisions at the top. So that is also telling that it is not a time I would like to buy, because the recent swing low is far away. I'm not able to short yet, but if it starts to come down, that will give lucrative shorting opportunities. Now let's look at the market's external view using market ETFs. You could use futures and indexes also. This is how most people around the globe see the market. Let's use the latest Metastock version 20XX and the features in that version. Therefore, I'm going to go to Quote Center, open the USA market instruments. Open them in Quote Center. Open the first instrument. Open it with weekly daily chart. And then I will scroll through each of them by pressing Alt right arrow. Alternate on the Windows keyboard and right arrow. This is DIA. Weekly is looking very similar to what we saw in total view, what we saw in mega cap custom index. Rallied for 2 weeks. In daily, it is now at a level where bearish headwind came earlier. Again, if bearish headwind can push price down, it is not uncommon for price to try to recover to that same level. And if it can go down little bit now, it will create a false upside breakout at the watermark resistance that was created by the bearish headwind. That will give lucrative shorting opportunities. What kind? Remember last market recap? It would not be at the market level, at least it will not be trend following, it will be reversal trades. Is it time to buy? Though weekly daily both colors are bullish, it is far above recent swing low, not a time when I would like to buy. Let's move to the next instrument, Alt right arrow. I am loving Metastock 20. IWM came very close to making a new all-time high. Thursday and Friday, and on Friday pulled back little bit with a bearish indecision. We see this bearish indecision, single one as in this case, or a cluster in multiple market level instruments when price is at double or multiple tops. Here it is at a double top in daily. In weekly again bearish headwind came earlier which pushed price down. It's not uncommon, I am repeating, for price to try to recover to the watermark resistance created by the bearish headwind, and if it comes down that will show that more selling pressure is there at that same price level. It will give lucrative shorting opportunities. Weekly color is bullish, daily is neutral, but far above recent swing low. I would not like to buy. It is looking like I'll end up with the same theme as last week, that I'm not willing to buy, and if I'm not willing to buy I may look to short, at least get ready with some shorting ideas just like I did last week. Let's see, we will complete the market recap and see if it is a repeat of previous week's scenario. Next instrument, mega cap ETF. I'll skip that, we already looked at mega cap custom index. Next is MDY mid cap ETF. Interestingly, here again for MDY, we had a bearish headwind earlier that led to a price drop. As is not uncommon, price tried to recover to that level and it is stopping at the watermark resistance created by that bearish headwind. It is also stopping at the weekly trendline resistance. For the same reasons as I explained in other market ETFs so far, it's not possible to buy now. I'll be happy to look to short if it comes down next week, which will create a false upside breakout. Next is QQQ. I'm expecting it to be the strongest because it is most influenced by mega caps, and mega caps outperformed this week. I'm running multiple programs. It is taking a while on Metastock, so therefore I am switching to TradeStation. It is always good to have two platforms if you are trading seriously. Two platforms with the same trading system that you use. QQQ rallied for 2 weeks. If you look at the relative performance in the weekly, it outperformed the market far above recent swing low, too overbought for me to look to buy. Again, bearish headwind came earlier, price is trying to recover. If it comes down now in daily after the bearish indecision, this instrument QQQ will not give an immediate shorting opportunity, but other QQQ constituents may give. SPY again too far above recent swing low. I'm not willing to buy. Interestingly, again we have a bearish indecision on Friday. In weekly, we had a bearish headwind and price is trying to recover to that level. Not possible to buy for me now. If it tilts down, I'll be happy to look to short. After looking at the internal health and external ETFs, internal and external view, let's look at QH bucket analysis, pinpoints reversals with remarkable accuracy thanks to Dr. Jeffrey Scott. After watching whose videos, I incorporated it in Q and made it 100% real time. It also has sector industry stock breadth. It shows where the market came from, where it is now, where it may go next. Though the market rallied for last 2 weeks, this week also it rallied. We saw that in the external view. Remember the external view market ETFs, they are market cap weighted. Internally, what is really going on is better shown by sector, industry, stock breadth. Then we'll say it is not that bullish. It is bullish, but not that bullish. Let's start with bucket analysis. 69% of stocks in S&P 1500, a nice mix of small, mid and large cap stocks. That's why I use it. Above mid Bollinger Band, therefore it is bullish and it is not overbought. Cannot be oversold, of course, when it is bullish. Sector industry stock breadth over 1 month has now turned bullish, that is longer term for swing trading. 10-day period also longer term for swing trading is bullish. But this week, interestingly, last 5 days, though the ETFs are showing a very bullish picture, this is showing a neutral picture, especially at a more granular level, that is stock and industry level. Sector seems to be a bit more bullish, but the real strength or weakness of the market is observed as we go more granular from market to sector to industry to stock, and industry and stock both are showing that it is actually neutral. And that neutral picture carried on to 2-day and 1-day periods, not showing the bullishness that is seen from the market ETFs. It also seems that market is stalling after going up for some time, and that picture of sector industry stock breadth is perfectly in sync with what we are seeing in the market ETFs also, with indecision or indecision cluster in multiple market level instruments. Lastly, for market level analysis, we look at Finder technical breadth, very valuable piece of insight, because if you remember, once again, last week's market recap, I used Finder to decide to look for shorting ideas, not buying ideas, though the market was going up. And this week, I think it will give insights into what we may look for. Why this is very valuable because because most of the Q trades for me and other traders are directional trades. We only profit by buying stocks and buying stocks going up or shorting stocks coming down in directional trades, and this technical breadth shows the overall posture to adopt and allows easy drill down to find low risk trade setups. As I mentioned, very valuable. Though the market ETFs went up, the weekly technical breadth is mixed overall as well as across all the categories. It is mixed. Reversals are more bearish than bullish. That is also pointing to swing traders favoring probably reversal trades. As I mentioned in last market recap, we'll see how my stock pick of last week did. The reversal trades tend to be more lucrative. We also have a bearish headwind alert in the weekly interval. It comes at the top. This is an aggregate alert. More often than not, after we have this alert in the weekly technical breadth, we have a pullback in the market. So that is also telling me not to continue to buy. And if I look at Friday's technical breadth, daily breadth for technicals, that is also bearish, not only overall but across all the categories, and once again reversals are much more bearish than bullish. Everything pointing to looking for shorting ideas more than buying ideas, though the ETFs may lead to a different conclusion. That is the value of looking at breadth, and that is the very much value of looking at technical breadth in particular. Q market level summary: the most important trading decision is whether and where to buy or short, or whether to stand aside. I'll continue with my last week's view. I would not like to buy now, and because I am not willing to buy, I would rather look to short. Will I short at the close of Friday? It could be if a stock was going down on Friday when the market closed up, that would be a serious underperforming stock that could be shorted. I also mentioned in the last market recap that we don't look for shorting ideas or buying ideas only during the weekend. So there would be probably, not probably, there were shorting ideas on Thursday as well. I will rather look to short now, not buy, though the market is bullish. And that is where I say that is why I say that my preferred trading direction may not match the market direction, especially when I am looking for reversals, as is the case now. Review of last week's trade ideas. I shared only one trade idea last week. That was a reversal trade. That was a bounce short setup. The most extreme case of reversal setup. I shared it on this day when it stopped right at the weekly and daily trend line resistance. They work very well, the memory trend lines, reversed down, giving a bounce short setup. Stop would be just above this signal candle's high, which was never approached. It fell sharply, hit the trend line support, at which point the trade would be closed. Yes, after that price went down further, but for swing trading purposes one would exit the full position if we are following Q guidelines at trend line support, at which point the white direction line support was also there. That would be a good place to close the entire trade, and of course it covered much more profit than the risk taken in the trade. Again, this shows the value of the Q 360 degrees analysis. The market went up, but my short peak last week worked beautifully, and I think the secret of the Q peaks doing well is that it is not, or they are not just technical trades, they are 360 degrees trades where I align the technicals. Q setups are very profitable overall, but I also align that with my market view, then industry strength weakness and fundamental strength weakness. Now next week we have a major event, central bank rate decision. I'll not use top down or bottom up analysis to look for any trading ideas, but I'd like to point to one trade idea that I shared in Q Traders Club, which is accessible to Q traders. It's not open to public, unlike my tweets or YouTube videos. The Traders Club is accessible from my website superiorprofit.co, then going into groups, and then further going into Traders Club. Here there is no fee, of course. Why I say of course is because I don't want to be tied to any compulsion to post in the Traders Club. You could also post if you are using Q systems. It is open to all the Q traders to post. Not that many people post other than me from time to time. So in the Traders Club on Thursday, I mentioned in the last market recap, we don't have to look for trades only during the weekend. I shared a shorting idea again on Thursday, and again that was a bounce short idea. Let's look at how I posted it on Thursday. In the weekly, This stock LEN, L-E-N, LEN, Lennar home building stock, stopped right at the weekly trend line resistance and daily trend line resistance, very similar to what ALDX did. The trade setups, sometimes you may see them as boring. They repeat the same thing over and over again. Boring from that perspective, but they are quite profitable, not boring at all from profitability perspective. Not only did it reverse from trendline resistances like ALDX, but it also displayed a bearish headwind in daily after displaying bearish indecision cluster. It also had one bear release signal. It was seriously underperforming the market. On Thursday, it closed right at the low of the day while the market was rallying. In the momentum chart, we had, sorry, not momentum, this is the direction force chart, shows the count of directional forces on the bearish side was 4. Anything above or equal to 3 is more significant. So this gave multiple possible trade setups, and if you are or if you are using Q Global, you would be able to read the possible trade setups. It had possible 3 short setups: headwind, unique reversal setup, box sideways setup, bounce, the extreme reversal setup. So 3 reversal possible setups came on the same day. Technicals allowed to short. The industry home building was one of the weakest, and over 5 days when I captured the snapshot, one of the most decelerating also, and though the market was rallying, the industry was severely down. The industry allowed to short. Let's look at the fundamental snapshot that I shared. Though market was rallying, this stock was steadily coming down over 5-day, 2-day and 1-day periods. Negative earnings growth. So it was a 1-star shorting candidate in terms of fundamentals, and 100% of peer stocks were down. In itself, the industry was very weak again when the market was rallying. That allowed us to short as a 360-degree trade. And again, you see, I shared the idea before knowing the results as usual. That shows the true confidence, true effectiveness, true profitability of the trading system that you and I use. That was Lennar. How did it turn out? We had only one trading day since I shared the idea. Let's look at that. Lennar, L-E-N. On Friday, again the market went up, mostly you can say, but this stock sharply came down, closed right at the close of the day. Very bearish, severely underperforming. The bounce short setup, which was also having multiple other shorting signals, is working well so far. So I'll stick with Lennar as my shorting idea of this week, and noting that the trade setup came on Thursday, and I shared it on Thursday. I'm not sharing it on Friday. I shared it on Thursday in Traders Club. I'm publicizing it to everyone in YouTube video on Friday, but the setup came on Thursday. That is my this week's trade idea. If you carry out the 360 degrees analysis using Q like that, you will most likely find other trading candidates today. I'd like to look to short today, not buy, just as you would almost every other day. Thanks a lot for attending. I look forward to seeing you in my next session. Have a great weekend, and as I always say, as these live examples in YouTube, Twitter, X, and Traders Forum shows, I'm quite confident shows, There is no reason not to do that. Trade profitably. Thank you.